CNBC TV18, celebrating 15 years of leadership.
I bring the friendship and the greetings of the American people. On behalf of myself and Michelle, thank you so much for welcoming us back to India. Bahut dhanyavad, señorita. Bode desho mein. You know what I mean.
Well, September 2014, Prime Minister Modi quoted Star Wars to New Yorkers, and today Barack Obama turned Shah Rukh Khan in front of a cheering audience at the National Capital. The Obamas have wrapped up their three-day visit with the U.S. president, saying that India and the U.S. could become best partners. So was this visit a game changer? Corporate India certainly hopes so, and that will be one of our top stories on India Business Hour tonight. Hi, Nayantara.
Good evening, Sheeren. It wasn't just DDLJ that got quoted. It was, we also saw Swami Vivekananda, Milkha Singh, Mary Kom finding mentions in that Obama speech. We're going to get you those highlights in just a bit.
All of that was just fine till they decided to play Mitwa. I don't know what the American embassy was thinking. I don't know why
May the force be with them.
I don't know why they decided to give it a Bollywood ending. It was just fine. In fact, it was great up until that point. But hey, what can we say? Well, let's take a look at the other headlines that we're tracking this evening. There's simply no stopping the bulls as records tumble for the fifth straight day. The Nifty breaches 8,900 for the first time. The Sensex rallies nearly 300 points thanks to a late surge led by banks.
Max India will split itself into three listed entities to unlock shareholder value. Life insurance will be demerged, healthcare and health insurance into one other company, and manufacturing will be the third demerged entity. Stock rallies in trade.
In earnings corner, robust sales drive Marquis profits high in the third quarter by 18%, but even this was lower than street expectations as higher expenses took their toll on the margins.
SpiceJet's 1,500 crore rupee treatment plan begins. Ajay Singh injects 100 crore rupees, will inject another 400 crores by February 15th, along with 370 crores from the Marins. Still no clarity on an open offer to minority shareholders. That's an exclusive.
It's the start of a new era in Greece. 40-year-old anti-austerity champion Alexis Tsipras names his new cabinet. Deep cuts across European market shares in Greece plummet 5% as the Eurozone finance ministers gather in Brussels. Wall Street sinks as crucial corporate earnings also disappoint.
Snowstorm Juno strikes the east coast of the United States, but with much less ferocity than predicted. New York and New Jersey almost unscathed, but life comes to a standstill in Boston and other areas in the Northeast.
A lot of action in the telecom space. Idea Cellular is on target with its third quarter numbers. Bharti Airtel expands its 4G network in 6 circles after a tie-up with Nokia. Spectrum auctions are delayed by a week, and the cabinet could discuss the price of 3G spectrum tomorrow.
An overwhelming majority expect the economy to pick up in 2015. A survey by AC Nielsen shows consumer confidence is at a 5-year high. A special report on the show.
Well, let's go straight to the market action now. And it was another day where we saw the steroids work wonders. The bulls charging ahead for the 8th straight day and records being shattered for the 5th consecutive session. The Nifty has now broken past the 8,900 mark for the first time in history. 9,000 is now just a stone's throw away. Look at that late spike that we saw coming in. The Sensex also rallying nearly 300 points. We did see a late rally lifting major indices to record highs. That's the Sensex for you, 29,571. The mid-caps also moving in tandem with the blue chips as the mid-cap index gained about 100 points. So let's go across now to Anuj, who joins us to wrap up the day's trading action. Anuj, a long weekend, a new day and new records. Let's put it as simple as that.
Well, the expiry weeks are all about trends, and trend clearly is in the favor of the bulls right now. And bulls don't want to let that control go after having gained that from the bears all through the month of January. In fact, the Nifty is on pace to gain 10% for this series. Today also, the market staged a great rally in the second half, and that was all led by the banking stocks. In fact, excluding the bank Nifty, the Nifty may have well ended flat in today's trade, but then banking is the leading sector, so no complaints over there. Let's talk about the stocks then, and again, it has to be led by banking stocks. Axis, ICICI, HDFC Bank, all of them up about 3 to 5%. Some other prominent Nifty winners in today's trade included stocks like ITC, Tata Motors, L&T, again heavyweights, impacting the Nifty by about 2 to 3% in today's trade. On some other gainers then, you had stocks like Cipla, Asian Paints, Bharti Airtel. So there were stocks from different sectors that were doing well in trade. But as I said, today was a bit of a narrow day. So you had some big losers as well. Infosys alone dragged the market by a good 22 points. Dr. Reddy's and KN India were other prominent losers, down about 4%. And then you had some other index heavyweights like HUL, Coal India, Mahindra and Mahindra. They were down fairly sharply today, 2 to 3% lower in trade today. And in the mid-caps, we had some big gainers in trade today. Jet Airways was one of the stocks of the day in late trade, up 14%. Moza Bayer was up about 10%. And stock of the month so far, Spark, was up 10% today, has doubled already in this month of January. So that's the market for the day. 2 days to go for the expiry. Looks like the countdown to 9,000 on the Nifty and 30,000 on the Sensex is well and truly on.
All right, appreciate you joining us, Anuj. That was the market action. And our Twitter question that we're asking you tonight, are we likely to touch 30,000 on the Sensex and 9,000 on the Nifty this week itself? Your response is, of course, coming up on the show. But the other big story that we're tracking, US President Barack Obama's 3-day India visit has drawn to a close, but not before an incredible final act. From Shah Rukh Khan to Swami Vivekananda, Obama charmed a 2,000-strong audience at the capital's Siri Fort Auditorium. Remember, Narendra Modi quoted Star Wars in New York? Well, Obama reciprocated by quoting Shah Rukh Khan's Dilwale Dulhaniya Le Jayenge, and beyond Bollywood, also evoking Swami Vivekananda's speeches at his hometown of Chicago. The president reiterating the support of the United States to India's permanent membership at the United Nations Security Council and called on India to play a greater role in the Asia-Pacific region. Overall, Obama hit just the right notes during his India visit. Of course, the proof of the pudding will be in the eating. Take a look.
It started with the
India, mera pyar, bara namaskar.
And before you could say,
Swami Vivekananda.
President Obama was raising a toast to
Diversity between our peoples.
Over his 3-day visit, the US president walked, talked and drank in India's culture.
Chai pe churcha. We need more of those in the White House.
The tea was hot and the hugs were warm.
Sisters and brothers of India. Tonight I was thinking about wearing a Modi kurta myself.
And Obama took a leaf from Modi's New York visit. Not quite Central Park with Hugh Jackman, but borrowing from a
Bollywood star.
At his town hall address.
Señorita, bude desho mein. You know what I mean.
कोई बात नहीं सेन्योरिटा, कोई बात नहीं. बड़े-बड़े देशों में ऐसी छोटी-छोटी बातें होती रहती हैं.
Well, he's not quite Shah Rukh Khan.
Secret Service does not let me ride motorcycles. Especially not on my head.
But Barack Obama's still won our hearts.
Chule sasas.
At the end, we can only say
Barack Bahut Dhanyavad.
In New Delhi, Shiny Iyer.
There you go. Highlights from the speech today that Barack Obama made to a town hall full of 2,000 people. Overall, the Obama visit is a success. It's been built on the momentum of the joint declaration signed in September last year when Prime Minister Narendra Modi went to the US. Ritupana Bhuyan and Arif Sherwani wrapped the business that got over the last 3 days.
A one-on-one tea session followed by a walk around the Hyderabad house lawns, the Modi-Obama chemistry not only made headlines but it also helped diffuse tension on several vexed issues, including the controversial Indo-nuke deal. While details are still awaited, both sides claim that differences over the nuclear liability issue have been resolved, paving the way for operationalizing the deal. The headlines don't end there. India and US have decided to explore joint production of defense equipment, and both nations will initially explore JVs to produce Raven UAVs, intel gathering platforms for C-130J Hercules aircraft, and hybrid power sources. On the policy front, there was some forward movement. India and the US will restart talks on a bilateral investment treaty, but there are concerns on dilution of the international arbitration clause, which could be a no-go for the US. The US has finally agreed to start talks on a totalization pact that will benefit Indian professionals working in the US. But no timeline has been given for a conclusion. Besides policy, there were B2B talks between CEOs of both the countries.
On the economic front, Obama was fairly clear that companies based in the United States will be the first ones in the queue to take advantage of the reforms initiated by the Modi administration.
As India pursues more trade and investment, we want to be first in line. We're ready to join you in building new infrastructure, the roads and the airports, the ports, the bullet trains to propel India into the future.
While the mood is confident, President Obama made no bones about the investment climate in India and said the government will need to improve the ease of doing business. At the CEO's forum, the president announced investments and loans worth $4 billion from the US Exim Bank, the Overseas US Private Investment Corp, as well as the US TDA. He said corporate America was excited about the potential that initiatives like smart cities and digital India open up. He also emphasized the US's interest in the infra sector and promised to send 2 trade missions on infrastructure in 2015.
By all accounts, this was one of the most successful visits by a United States president to India. But the real work begins now, with both sides building upon the decisions taken by Obama and Modi during their bilateral talks. It is fairly clear that the real impact of these decisions will be seen in a few years from now. In New Delhi, Rituparna Bhuya.
Well, Commerce Minister Nirmala Sitharaman met the U.S. Commerce Secretary Penny Pritzker earlier today and discussed the potential areas that could see enhanced bilateral cooperation. Let's listen in.
Some of the points on which we have spoken are the U.S. to have interest and investments in infrastructure. We highlighted the fact that on defense, several sectors have been, several subsectors within defense have been de-licensed. We've opened up on FDI and spoke about the railways, wherein investment can come in. These are, of course, big things. But most importantly, we've asked for possibilities where technology could be shared to improve and also to bring in investments to help small and medium sector industries in India. Because small and medium industries are the ones which provide great number of jobs. They employ a lot of people both in the 2-tier, 3-tiered cities.
The question we're asking is, was this visit just about the optics or a game changer? Corporate India hoping this landmark visit is a sign of better things to come.
CNBC TV18 exclusive.
He is here to ensure that there is a red carpet, there is ease of doing business in India. He's given his personal commitment. He has told many of the CEOs that I'll watch your projects personally. And I think people came out of that meeting very comforted in a sense.
The first and fundamental thing that is required from both of us, I think, is a shift in thinking and a new way, an entirely new way of looking at areas of common interest.
I think capital and technology from America will flow. I think that's the message. But India is going to deliver the market. India has its challenges, but I think the atmosphere you saw today, the bonhomie you saw today, and the positive climate which the 2 largest democracies can really help each other is immense. And I think that's the feeling most people would have gone away with.
We see India as a big growth market and a lot of opportunities as we digitize the country. What we need from the government is more consistency in policy and regulation.
CNBC TV18 exclusive. First in business worldwide.
Well, so a lot of possible partnership, a lot of potential there between India and the US, but let's get real. $100 billion today, $500 billion, that's the ambition over 2020. We've got a long, long road to cover, and India needs to clarify its position on things like the bilateral investment treaty. We don't have a model agreement for bilateral investment protection just yet, and that could be a stumbling block as far as negotiations are concerned. So define our national interests and then engage with whether it's the US or any other international partner. But the momentum continues. Now, the big corporate story today. In a bid to unlock shareholder value, Max India has decided to break itself up into 3 companies: Max Financial Services, Max India, and Max Ventures and Industry. Now, this restructuring announcement sent the stock nearly 9% higher. Max India's Ananjit Singh spoke exclusively to CNBC TV 18 and said the restructuring would bring better clarity to the business structure and afford greater flexibility in driving growth forward. Take a look.
There are no plans that have been decided to do additional businesses in the financial services sector. But you asked a question, are we open to looking at other opportunities? The answer, of course, is yes. So it's an independent company. It has independent management, and now it will have even independent shareholders. And with all that's happening in our environment and the new takeoff that we are witnessing in India, there is certainly, I think, a reason for us in the future, not now, to look at other opportunities in the financial services area. As regards why we didn't combine health insurance with the life insurance piece, I think the answer is quite clear. We wanted to offer a pure play to investors who understand and invest in life insurance businesses.
When are you looking to unlock value in your life insurance? You've got a headroom of about 23%.
We are completely free to use the 23%. We're in, I think, a unique and sitting in a very pretty position to use that 23% at the ground floor level, the upper story level, OPCO, ROPCO.
Are you talking to someone else?
No, we have no commitment. We have no obligation. They have no right to claw up to 49. We are free. So we will look for the right time, the right investor, the best value, and then we'll exercise it.
Bupa, your other partner in healthcare, has already announced that it wants to increase the stake to 49%. When are you expecting that to close? How much money are you expecting? And, there is an ordinance that has been promulgated. Is that good enough for Bupa? And will the demerger exercise perhaps delay the entire exercise?
Yeah, no. Firstly, the demerger exercise will not delay it because that's going to happen at the operating company, at the level of Max Bupa. The deal is done with Bupa. The deal has also been agreed to be at par value, and as it's a fledgling business, it's a startup business, obviously the fair market value of that business is not par, it's below par. But in anticipation of the plans we have for Max Bupa, they have agreed to come in at par, and I believe that amount for this 23% is somewhere shy of 200 crores. So with the capital that Max India has and with this capital, that gives us all the capital we need to bring Max Bupa to a peak capital level, and after which I think it will turn the corner, it will be profitable on its own. Now, when will this be consummated? It's a very good question, and I think Bupa are studying it, trying to understand what will happen in the next session in Parliament. But the deal is slam dunk in a sense. So as far as I understand the legal sort of aspects of it, if it goes through in this Parliament, it will happen within a fortnight after that. And if not, we'll just have to wait till the government absolutely ratifies the ordinance, which I believe at the very outside will be 6 or 8 months.
Is this also a roadmap to a succession plan?
Yes. So firstly, it's not a promoter-driven company. As you know, I've gone non-executive chairman at Max India. I will be making certain other announcements to pave way for my colleagues to take larger levels of responsibility in the Max Group. So we believe that we are the sponsors of the company, but we are not a promoter-managed company. As far as my children are concerned, this is a matter made very clear and socialized with the board, with my top management team of Rahul, Mohit, Rajesh, Rajat, etc., etc. And yes, there is an element of long-term succession planning. By the way, the succession planning can't only be for kids. It has to be about me as well, because I have other interests in life as well.
How have you safeguarded minority interests? You know, at times of demergers, we hear a lot of noise about it.
Because it's a mirror split. So there's no valuation required. So for every one share that you own of Max India today, you will get a share in the other businesses. So it's a like for like. So there's no question of anybody put to advantage or disadvantage. It is absolutely like for like.
Well, that's Anarjeet Singh explaining the rationale behind the restructuring of the Max Group into 3 separate verticals, and it's gotten a thumbs up from investors. The stock up by 9% today. On to earnings corner now. Auto major Marquis' third quarter numbers disappointed the street. Profits rose lower than expected, almost 18%, hit by higher tax and other expenses. But on the positive side, the company did manage to clock a 12.5% volume growth. For more details, let's go across to Sonia, who joins us from chilly New Delhi and not Mumbai. Sonia, how do you feel?
Well, it's quite cold here, but so was the case with the Maruti's numbers. Cold this time around, not really, bringing about any fireworks. So to quickly take you through the numbers, the earnings were below estimates, as you rightly pointed out. It's not that the numbers didn't grow. So we did have a revenue growth of around 15-odd%. The margins have gone up a tad bit year on year to 12.6% versus 12.4%, and the profits too have gone up about 18-odd%. But it's just that the market was expecting a lot more, and the reason for the disappointment was despite the strong volume growth, it couldn't translate onto the EBITDA line because we did have a couple of expenses. The other expenses were higher by about 24% year on year. That's because it includes an exceptional loss related to the excise duty demand on the sales tax subsidy. So there was that loss that came into play. Also, the management said that they have a whole host of new launches, and the costs for those new launches, the higher ad expenses, was factored into the other expenses this time around. Apart from that, the tax expenses were higher due to the FMP tax accounting. So that went up by close to 30%. And the other income has seen a sharp dip this time around compared to an average that they've done of around 193 crores in the last 20 quarters. This time it was just about 129 crores. Also, the depreciation was higher due to the new depreciation regulation. So, despite all of this, the stock has moved up because most analysts on the street believe that the triggers for the company continue to remain extremely positive going ahead, and most continue to have a buy. So that's the reason after an initial dip, you saw, the stock surge. Back to you.
That's quarterly performance of Maruti. Thanks a lot, Sonia, for joining us with that analysis. Now, Maruti's minority shareholders will vote on the plan to allow Suzuki to own and invest in the upcoming plant in Gujarat over the next 6 months. Gujarat's Chief Minister will perform a groundbreaking ceremony for the new plant tomorrow.
And you can stay tuned to a CNBC TV 18 exclusive interview with the Maruti management that's coming up tomorrow. The budget carrier SpiceJet has undergone the first round of resuscitation, with former promoter Ajay Singh injecting the first tranche of capital over the weekend. Now, the second tranche will be due by the 15th of February, and CNBC TV 18 Sindhu Bhattacharya and Kritika Saxena report that the two together will be important investment-related events that we should watch out for by the 15th of February, but there continues to be lack of clarity on the terms, and especially as far as the issue of an open offer is concerned, with no word coming in from the market regulator just yet.
Former SpiceJet promoter Ajay Singh's 1,500 crore rupee treatment plan for SpiceJet has not only been approved, it has been put into action. Over the weekend, the soon-to-be promoter injected the first tranche of 100 crore rupees into the airline, and the next dose is due on the 15th of February. That's when the consortium led by Singh is expected to pump in another 400 crore rupee into the airline. But that's just one of the reasons that date is important for the low-cost carrier. The second is that by that date, the outgoing promoters, the Marans, are expected to complete the conversion of some warrants for close to 300 crore rupees. Now, as per the plan approved by the Ministry of Civil Aviation, the Marans are also expected to pay close to 370 crore rupees in redeemable instruments. This will happen in 2 tranches, and the first of these, to the tune of 320 crore rupees, is due by the 15th of February. This last payment could well be a sort of haircut that has been agreed upon as part of the transaction, which will see the Marans cashing out. But Singh's recapitalization plan hinges on implementation, and that may be easier said than done, given a host of extraneous challenges. For one, market regulator SEBI is still to decide on whether an open offer can be waived for the new promoters. After all, the ministry approval is only for the change in management and is anyway subject to the buyers adhering to FIPB and DIPP norms with respect to foreign investment in an airline, and the new directors on the board getting security clearances from the Home Ministry. The second big hurdle will be getting lenders and creditors to stay patient. Of the total liabilities of 1,580 crore rupees, SpiceJet owes AAI 187 crore rupees, 89 crores to other airports, 140 crore rupees to various tax authorities, and 653 crore rupees to aircraft lessors. and 508 crore rupees to other creditors. The third hurdle will come in reworking the airline's costs and renegotiating contracts to help compete in an aggressive market. Leasing companies have already indicated they're running out of patience, and sources say they may move to repossess 11 of the airline's 19 Boeing 737 aircraft by the end of January. Should that happen, SpiceJet's severely curtailed fleet will make keeping the airline in the skies that much more difficult. With Sindhu Bhattacharya in New Delhi, in Mumbai, Kritika Saxena.
Well, several unanswered questions remain there for SpiceJet. The big global story, it's the start to a new era in Greece. Alexis Tsipras, who's captured power on an anti-austerity plank, is named his new cabinet. Stocks in Greece sinking in trade as we speak. Investors now fear that Greece would exit the Eurozone with a new left-leaning government in place. This is also having an impact on major European markets. All major indices are down by about 1% or so in trade. The FTSE now almost 1% over. The DAX and the CAC have lost over 1%. Across the Atlantic, shares opening with deep cuts on Wall Street and now trading with losses of over 2%. But it's not just the news from the Eurozone. Poor corporate earnings from companies like Caterpillar also playing spoil sport. 2% lower now on the Nasdaq. The snowstorm Juno, though, has turned out to be a bit of a dampener. New York and New Jersey have been relatively unscathed, with the U.S. Met Department apologizing to people. The weatherman had predicted 36 inches of snow, but New York so far has got just about 6 to 8 inches. But Boston and other areas in the Northeast have been badly hit. Morgan Brennan gets us this report.
We'll call it the historic storm that wasn't, at least not here in New York City, where we received 6 to 8 inches of snow in many parts of Manhattan. That's dramatically less than forecast. Still, further north, many areas are still getting pummeled by this snowstorm. We've got flood warnings in effect in certain parts of the coast, some areas receiving as much as 3 feet of snow, and in Massachusetts, tens of thousands of people without power. So yesterday, the National Weather Service issued a blizzard warning. That in turn caused many government officials to brace for the worst. We had 8 governors declaring states of emergency. We had travel bans imposed in several states. Major highways closed down. Public transportation here in New York City closed down. Now those travel bans are starting to be lifted in certain areas. Here in the city, we're starting to see taxi cabs carefully drive down the street. A lot of people walking to and from work and around the city now. But perhaps the most interesting tidbit is an apology that was tweeted by the National Weather Service's head meteorologist for the tri-state area. On Twitter, he said, quote, "My deepest apologies to many key decision makers and so many members of the general public." Now, saying that in light of the downwardly revised forecast, the fact this blizzard was not the magnitude that had been originally expected, and as New York City digs out from all of the snow and operations, transportation here gets up and running again, that perhaps will become the focus. This growing debate between the U.S. weather forecast model, the one that was used for this storm, this potentially historic storm, versus the European one, which arguably is more accurate. Morgan Brennan in Times Square, back to you.
Well, Morgan there reporting from Times Square, New York. The U.S. Met Department apologizing for what is now being seen as a panic call from the Met. On that note, it's time for us to wrap up this edition of India Business Hour. Do stay tuned. The news continues on CNBC TV 18.